Inflation affects everyone, changing the cost of living and the value of money. Over time, prices for goods and services tend to rise, making it harder for us to stretch every hard-earned dollar. While inflation may feel like an invisible force working against your finances, it also offers chances to grow wealth through smart investments in assets that gain value during these times. Knowing where to put your money can greatly impact your financial future. A recent study highlighted how inflation reduces purchasing power, no matter the rate. With inflation at 2% or 4%, people lose value as prices go up, and this loss becomes more serious at higher rates. This means keeping cash or low-yield savings can lead to big losses over time. Understanding which assets do well in an inflationary environment helps you protect your wealth and take advantage of rising economic trends. This video lists 21 assets that usually increase in value as inflation rises. Each asset comes with practical examples and reasons why it performs well during inflation. If you're new to investing or looking to safeguard your wealth, these options can point you in the right direction. Let's start with tangible assets that have a strong track record. Number 1. Real estate. Real estate remains one of the most dependable investments during inflation. As construction and labor costs rise, property values often follow, making homes, commercial buildings, and industrial spaces more valuable. Rental properties also offer steady income streams that can be adjusted to match rising living costs, helping investors maintain their purchasing power. Real estate is also a tangible asset that holds intrinsic value, making it appealing in uncertain times. Opportunities to invest range from buying properties directly to participating in real estate investment trusts. Number 2. Farmland. Farmland is a scarce asset that consistently gains worth as inflation increases. The rising demand for food and agricultural products pushes up both the value of the land and the crops it produces. This makes farmland a dual source of income, combining land appreciation with profits from agricultural yields. Its limited availability ensures that farmland remains a high-demand asset. Investing directly or through agricultural-focused funds can reveal the potential of this market. Number 3. Gold. Gold is a timeless asset that protects wealth during inflation. Its value tends to rise as currencies lose purchasing power, providing a stable store of value. With a finite supply and widespread demand, gold remains a globally trusted option for preserving money. Its appeal strengthens during economic uncertainty, as investors seek safe havens. Options for investing in gold include physical ownership, mining stocks, or exchange-traded funds that track its price. Number 4. On our list of things that benefit from rising prices is silver. Silver is both a precious metal and an industrial resource, which makes it well-suited to withstand inflation. Its role in manufacturing, renewable energy, and electronics ensures steady demand even as costs climb. It offers a lower entry point than gold, making it an accessible choice for many investors. As a tangible asset, silver also provides stability when currencies weaken. Investing options include coins, bars, and ETFs designed to track its performance. Number 5. Collectibles. Collectibles, such as fine art, antiques, and luxury watches, gain value over time due to their rarity and enduring appeal. These assets attract interest during inflation, as wealthier buyers turn to tangible investments that preserve their worth. Record-breaking auction sales often occur when inflation is high, showcasing the growing value of these items. While investing in collectibles requires knowledge, it offers both financial rewards and the opportunity to own unique pieces. With careful selection, collectibles can add significant value to an investment portfolio. Number 6. Dividend stocks. Dividend stocks offer a way to generate steady income while preserving capital during inflation. Companies in essential industries, such as utilities and consumer goods, often have strong cash flows that allow them to maintain dividends. These businesses can adjust their pricing to offset higher costs, keeping their profits stable. Reinvesting dividends creates the potential for compounding growth, adding to long-term returns. Selecting established, well-performing companies ensures reliability and consistent income. Number 7. Rental properties. Rental properties provide a combination of regular income and long-term value appreciation, making them ideal during inflation. As housing costs rise, property owners can increase rents to match market rates, keeping their earnings aligned with inflation. High-demand areas often see low vacancy rates, adding stability to this investment. Property ownership also offers potential tax advantages, which enhance its profitability. Managed effectively, rental properties can build wealth while maintaining consistent cash flow. Number 8 on our list of things that benefit from rising prices is energy infrastructure investments. Energy infrastructure, such as pipelines and storage facilities, benefits significantly during inflation as energy prices climb. These assets often operate under long-term agreements, ensuring stable cash flow even during economic shifts. Their essential role in delivering energy makes them less susceptible to market downturns. Unlike volatile energy stocks, infrastructure investments tend to provide predictable returns over time. This combination of income and stability makes them a compelling option for inflation-resistant portfolios. Number 9, oil and gas. Oil and gas prices often rise rapidly during inflation, reflecting the growing demand for energy worldwide. This creates opportunities for significant gains in the value of these resources and the companies that produce them. Shares in oil and gas firms or sector-focused ETFs offer ways to participate in this market. Although this sector can be volatile, its importance in global economies ensures its long-term value. Investors who carefully select energy-related assets can benefit from their inflation-driven growth. Number 10, industrial metals. Industrial metals like copper, aluminum, and steel are essential for building and manufacturing, ensuring their value rises during inflation. Infrastructure projects and technological advancements drive demand for these materials, increasing their worth. Supply chain limitations often add to price growth, making them even more lucrative. These metals can be accessed through direct purchases, ETFs, or shares in mining companies. Their critical role in the global economy makes them a strong choice for inflation-proof investments. Before we continue with the video, take a quick moment to hit that like button and subscribe if you haven't yet. And don't forget to ring the bell for notifications so you never miss out on our latest updates. Plus, we've got some helpful resources in the description. Check them out and share your comments after you're done watching. Number 11, agricultural commodities. Agricultural commodities like corn, wheat, and soybeans consistently increase in value during inflation. As food prices rise, the market for these essential crops grows stronger, benefiting producers and investors alike. Global population growth and changing consumption patterns drive demand, while limited farming resources create scarcity that boosts prices further. Investing in these commodities can be done through futures contracts, ETFs, or agricultural-focused funds. Their connection to basic needs makes them a reliable choice for inflation protection. Number 12 on our list of things that benefit from rising prices is cryptocurrency. Cryptocurrencies, particularly Bitcoin, are often seen as a digital alternative to gold during inflation. Limited supply and decentralized nature contribute to their value as inflation-resistant assets. While volatile, cryptocurrencies have gained increasing adoption as a store of value and medium of exchange. Blockchain technology underlying these digital assets also adds to their appeal, providing transparency and security. Investors can access cryptocurrencies through exchanges, funds, or payment platforms designed for easy transactions. Number 13, Treasury inflation-protected securities. Treasury inflation-protected securities are government-issued bonds designed specifically to combat inflation. The principal value of TIPS adjusts based on changes in the Consumer Price Index, ensuring that investors receive returns aligned with inflation. Interest payments are calculated on the adjusted principal, providing consistent and reliable income. TIPS are a low-risk option backed by the government, making them an excellent choice for conservative investors. These securities can be purchased directly or through mutual funds specializing in inflation-linked bonds. Number 14, fine wine. Fine wine has proven to be an asset for investors seeking diversification during inflation. Limited production of high-quality vintages ensures scarcity, driving demand and increasing prices over time. The global market for fine wine continues to grow, supported by interest from collectors and enthusiasts. Investing in wine requires careful selection of bottles with strong potential for appreciation, often with the help of wine investment platforms or funds. Beyond financial returns, fine wine carries cultural and aesthetic value, adding a unique dimension to portfolios. Number 15. Forestry. Forestry and timberland investments offer stability and growth during inflation, driven by the rising costs of wood and paper products. Timber is a renewable resource with versatile applications in construction, packaging, and energy, ensuring consistent demand. Land used for forestry also appreciates over time, further boosting returns. Investors can participate through direct ownership of timberland, timber-focused REITs, or funds dedicated to forest management. This combination of land value and renewable resources makes forestry a sustainable investment option. Number 16 on our list of things that benefit from rising prices is small businesses. Small businesses, especially those in essential industries like healthcare, food services, and repair, can thrive during inflation. These businesses often have flexibility in adjusting prices to match rising costs, allowing them to maintain profitability. Ownership can be achieved through direct investment, franchising, or partnerships, offering various entry points for investors. Businesses with strong customer bases and localized demand tend to perform well, even in challenging economic climates. Supporting such enterprises can generate both financial returns and community benefits. Number 17. Royalties and licensing. Royalties and licensing provide consistent income streams that are often tied to inflation-resistant assets like intellectual property. This includes earnings from music, patents, books, and film rights, all of which can grow in value as demand increases. The scalability of royalties allows rights holders to generate revenue with minimal ongoing effort. Investors can participate through direct ownership or funds specializing in royalty streams. These investments offer a unique way to benefit from creative or technological innovations. Number 18. Stocks in energy and utility companies. Energy and utility stocks often perform well during inflation due to their essential role in daily life. These companies provide critical services, allowing them to pass rising costs to consumers without losing demand. Many also offer dividends, providing consistent income alongside capital appreciation. Sectors like renewable energy, oil, and gas have seen particularly strong growth in inflationary periods. Investing in these stocks through individual shares or ETFs offers a straightforward way to benefit from this stability. Number 19. Insurance-linked securities. Insurance-linked securities, ILS, are financial instruments tied to insurance policies such as catastrophe bonds. These securities provide returns based on insurance claims rather than traditional market movements, making them resilient to inflation. The value of ILS increases as premiums rise, reflecting higher replacement costs during inflation. Investors gain exposure through funds specializing in insurance-linked products, diversifying their portfolios with assets that are largely unaffected by broader economic shifts. Number 20. Commodities ETFs. Commodity ETFs offer an accessible way to invest in a range of inflation-resistant materials, including metals, energy, and agriculture. These funds track the performance of underlying commodities, simplifying the process for investors who prefer not to manage individual assets. Their diversification across multiple sectors reduces risk while capitalizing on inflationary trends. Commodities ETFs also provide liquidity, allowing investors to enter and exit positions easily. This flexibility makes them a practical choice for building an inflation-protected portfolio. Last on our list of things that benefit from rising prices is index funds for inflation-resistant sectors. Index funds targeting inflation-resistant industries, such as healthcare, consumer staples, and technology, offer a balanced approach to investing. These funds aggregate stocks from companies that have historically weathered inflation well, providing stability and steady returns. Their low expense ratios and diversification make them appealing for long-term investors. Investing in such funds simplifies portfolio management while ensuring exposure to key sectors. As inflation drives growth in these industries, index funds deliver consistent value appreciation. Inflation doesn't have to erode your financial stability. Instead, it can become an opportunity to grow your wealth when you choose assets that thrive in rising economic environments. Assets like real estate, commodities, and inflation-protected securities can not only preserve wealth, but also create growth during challenging times. Diversifying across tangible, financial, and alternative investments ensures a balanced approach to navigating rising prices. Understanding how these assets perform allows you to stay ahead and protect your financial future, even as inflation continues to shape the market. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.